MEG Energy reporting a pretty sharp decline in profits and revenue in the latest quarter. Huge. I mean, the drop was roughly 50% year over year. There's the stock slipping a little bit today. Let's get more from John Stephenson, founder of Granite Point Research. Thanks for joining us. So I thought, wow, that's a big drop. Were oil prices down that much? But it wasn't quite that simple at MEG Energy.
No, the oil prices were slightly softer, but really what it was predominantly the turnaround that they did, this Phase 2B, which was planned, and it came in. The good news was it came in on time and on budget, actually a little below budget, so they did well in bringing it on. But
is this an expansion or a maintenance
just a maintenance-related issue. Okay. And it took off roughly 32,000 barrels a day on 100,000 or so barrel a day base, and then another 12,000 barrels a day came off for wildfires. So, this is a perpetual and ongoing problem for the industry, is these wildfires as well. So that was probably the most unexpected part. So overall, that brought down revenue considerably for the quarter compared to a year ago. It also brought down earnings considerably, almost 50% from a year ago. As well as obviously production coming down. So those were sort of the big moving parts. They also increased the dividend by 10%. It's now going to be, starting in October, 11 cents a share for their quarterly dividend.
The company is in play. We know that Strathcona has made an unsolicited approach. Now, the National Post is quoting the Senova's chief executive, John McKenzie, striking a cautious tone when asked about a possible white knight bid for MEG. He says he doesn't see any particular holes in the current portfolio of assets. So I guess Senova is going to talk down its eagerness. They don't want to pay too much.
Yeah, and I don't think they want to tip their hand if they are going to go anywhere. I don't think, they maybe have to pay up that much. They would be the most logical bidder for the company because they really have contiguous operations at Christina Lake and other places in the Athabasca region. And I think they would be probably the best suitor for the company. But they've also gone through major turnarounds as well, particularly on the refining side. They're looking to have their cost step down in the coming years through 27. And so, it's a fairly significant capital investment. It'll be probably north of $6 billion because that's what the current Strathcona offer is valued at. It's got to be north of that to get people on side. And I think Cenovus isn't going to move unless they have some relatively good signals from the MEG board that this is something that would be welcomed.
Right, because Senova stock for a while this year was out of favor. Why was that, John?
Well, it's because of the refining side. It's been a perpetual drag on the company for a while. But what happened in the last quarter was the refining side actually was the bright light. And so it's turned around. They've spent a lot of money and time fixing up and doing turnarounds at these facilities, particularly the one at Toledo, Ohio. I mean, it gives it sort of a more defensive side of the company because it has not only production, but also the refining and downstream aspects of the story. But the refining had been a problem.
That's interesting. You highlight the wildfires. So this, every year there's usually a potential impact on the oil sands, but it does seem to be a consistent theme year after year.
Well, lately it's been a problem for them, and I think one of the issues is it highlights pressure on the industry because, how do you plan for this? How do you ensure that you're resilient? How you can recover quickly? And already you're seeing a fair bit of consolidation in the industry. It's been ongoing for years. And this is all part of the theme, and maybe the folks from MEG from Strathcona would argue, this is one of the reasons you build a bigger, more diversified company, and therefore you're able to be more resilient when you have wildfires in certain regions that might impact certain operations. You're not because right now MEG produces from Christina Lake and that's it. They have lots of barrels in place at Kirby and Surmont and other areas, but they're really just a producer at Christina Lake. That's their main asset. So if you have wildfires in and around the region, it can dramatically impact them and their related infrastructure. So you're seeing more and more companies looking to get scale, to be more diversified and be able to withstand some of these things that are happening out there that have become a perpetual nuisance for the industry.
Just switch into Mark Carney's policies for a sec. He's talked about speeding up regulatory approval. Of course, politicians have talked about that for years. But do you think they will achieve a smoother process for investing in projects in Canada?
I certainly hope so. I mean, I think all the noise and the signals are very positive. But this is a hugely complicated problem for the industry. I mean, if you just recently, yesterday, TC Energy came out and said they're going to invest, in acquisitions and development in the U.S., not Canada. And it's just so much more. It's so much easier to be in the U.S. It is much more business friendly. And I think anything that we can do to do that, because I think when you look around at what the crown jewels are in Canada, in terms of industry, it is energy. And you have in the U.S. in terms of production, it's starting to roll over as it becomes, a mature basin. That's happening in Russia. It's happening in Saudi Arabia. It's happening in Mexico. So where are you going to go to get future demand, to satisfy future demand? It's got to be from Canada. And we have the same basic problem we've always had, which is how do you get the production out to markets? And so this is job one for the government. We should be championing industry, or government should be championing it, because nothing exists without business. None of the social programs can exist. And so the productive class needs to be set free in this country. And I think that's the first and foremost, the energy industry.